we built Sphere so that people could invest in a climate-friendly way and do well in saving for retirement. So they wouldn't have to compromise on choosing between investing in something that makes good returns and investing in something that's good for the planet. It was really important to us in setting up Sphere.
Hi, and welcome to Tribe Talk, where we alternate between speaking to young changemakers and established entrepreneurs in the social impact space. My name's Victoria, and I'm one of the newest team members here at Tribe, and I also work in philanthropy. I'm super excited to be here today with Alex Wright-Gladstein, the founder and CEO of Sphere. Alex, thank you so much for joining us today.
Thanks so much for having me.
Well, before we begin, I just wanted to have a brief interlude for a word from our sponsors.
Streamer. Tribe Talk is a streamer studio production. Stream your podcast, stream your story, stream yourself. Try it free at streamr.nyc. Make your voice, brand, and message seen and heard on every platform today.
Tribe Talk is sponsored by Raise, a mobile-first platform powering individual activism, corporate giving, and nonprofit volunteerism. So download Raise on Google Play or the App Store to give, volunteer, and connect.
So Alex, my first question to you is, what were your personal motivations that led you to found Sphere?
Well, I've cared deeply about climate change ever since I was a kid. My seventh grade science teacher opened my eyes to the problem, and I haven't been able to stop thinking about it since then. And so I decided early in my career that I wanted to be a serial entrepreneur. I kind of spent college trying to figure out what job I wanted to have to maximize my impact on climate, and did internships in science, working in labs, in DC, working in policy. I ended up doing an internship at a venture capital firm. And that's where I learned about entrepreneurship. And I actually met a specific person, Larry Bach, who had been a serial entrepreneur. He had gone around to labs across the country looking for the smartest people in nanotech and convincing them to spin out their technologies to start companies. And he had started 20 different companies that way. 14 of those companies had gone public. And learning his story made me realize, oh, serial entrepreneurship can be a career path. I want to do that. And so I decided to work at a later stage startup in climate after graduating so I could get some business experience. I figured if I was going to be the business co-founder of climate tech spinouts, I needed to have some business experience. And so worked for 5 years and then went to MIT for an MBA as an excuse to meet people across campus inventing things, which was amazing because there are over 300 labs at MIT that do energy-related research, and I got to meet a lot of the people in those labs, and that's how I met my co-founders of my first startup. They had invented the first processor chip to communicate using light. We spun that out in 2015. That company is called IR Labs, and we're cutting the energy use of AI in half by using light to move data between chips. And we've grown that company to where now we have customers like Intel, NVIDIA, AMD, and back in 2017, we started offering a 401k retirement savings plan to our employees, and I asked for a climate-friendly investment option in the lineup. It ended up taking over 3 years and a lot of persistence to get a single option that, at a baseline, wasn't invested in fossil fuel companies. I couldn't believe how long it took, how hard it was. And that's what started me on the path of trying to learn about the 401k industry. And that ultimately led to me founding Sphere to make it easier for everyone else to invest in a climate-friendly way than it had been for me, as CEO, asking service providers to make this possible for our employees.
Well, that's such an incredible journey, and thank you for sharing that, and incredibly inspiring to hear not only how you've pursued entrepreneurship multiple times, but you've also combined that with such a deep interest and passion and advocacy for the sustainability industry. And that's such an important strand throughout your tale. And one of sort of a key question that I really would love to ask you is, what are the main challenges and opportunities in advancing sustainability, and why is it so important at the moment? And if you could answer this question informed by your sort of experience founding all these different companies and having insight from so many different angles. That would be really amazing.
You know, the landscape is changing all the time, and right now it's an especially unique one because we made so much progress under recent administrations, really getting more renewable energy and climate tech deployed, and then a lot of that has been rolled back in the past year. And I think the challenges and opportunities, it's kind of the two sides of the same coin there. Um, this is a time right now when climate tech companies are really having to prove that they have good business fundamentals and they don't have to rely on government subsidies or government programs to make their businesses viable. And so it's been really tough, and a lot of climate organizations have been struggling as a result. But there are also a lot of climate organizations that are doing really well because the business fundamentals do work. Solar and wind, and that combined with batteries is less expensive than fossil fuel power generation for the grid in the US. So there are a lot of amazing renewable energy companies that are doing really well, even in this bad policy environment for renewables, just because the business fundamentals are there. And we built Sphere so that people could invest in a climate friendly way and do well in saving for retirement. So they wouldn't have to compromise on choosing between investing in something that makes good returns and investing in something that's good for the planet. It was really important to us in setting up Sphere. And so we also have done well because even though the policy environment for climate friendly investing in 401ks has been bad, it actually hasn't really negatively impacted us as far as we've seen because our fund is designed to just have good performance. All it does is exclude fossil fuel companies, which have had the worst returns of any sector of the economy for the past 2 decades. So if all you do is exclude them, you can still have a fund that performs really well. It's a very simple approach to investing. You can still diversify well across the rest of the economy. And we have fees that are competitive with any typical S&P 500 index fund, so people aren't having to pay more for climate-friendly investing. And so because the business fundamentals are there, we've been doing well. And now the flip side of the coin is the opportunity has grown enormously in the past year. People are realizing that they can't rely on the government to save us when it comes to climate change. And so they're thinking more and more about what they can do personally to help make sure that we have a safe planet to live on. And that means we have more and more people coming to us, wanting to invest with us, and really taking action where they had heard moving your money is one of the most impactful things you can do for climate in the past, but they hadn't really taken the steps to move their money. We saw a spike in people investing on election day and again on inauguration day. And we heard over and over again people were doing this because they knew it was an important thing to do. They just hadn't gotten around to it. And seeing that the government isn't going to save us at this point, they realized, okay, now is the time that I need to take every action I can. And so that creates a big opportunity for a company like ours. And at the same time, the 401k advisors, the professionals who help decide what options are going to end up in a 401k plan, they see that demand and they want to keep their customers happy. And so as long as the business fundamentals are there, as long as the fund is doing well, it has good fees that are competitive, et cetera, they're happy to keep adding this as an option for people to invest in. And we set the fund up to be able to do that. So challenges and opportunities are unique right now with the current presidential administration that we have. But it's also created a void in the marketplace. A lot of the bigger asset management firms that were claiming to offer climate-friendly options have stopped offering those options, and we're really the only ones left standing, and that creates an opportunity as well.
Wow, well, it sounds like, you're doing incredibly important work, and I really love how you've really drawn attention to the fact that investing into sort of green energy and climate is actually going to bring you the same returns, which I feel, at least from my perspective, has often been a misconception where people think, oh, if I start impact investing, my returns are not going to be as high as if I go down a more traditional investment route. And so it's super amazing to hear you sort of shedding light on the fact that actually the returns could actually even be higher than if you're going down the traditional fossil fuel route, which kind of brings me to one of my other questions, which was, what is a surprising misconception people have about ESG investing or investing into green finance that you wish more people understood?
Oh, well, you just named one, which is you don't have to compromise. And that's such an important one. And actually the fossil fuel industry has spent a lot of money getting us to believe that you do have to choose. They pay people to say it over and over again, whether it's on Fox News or on the floor of the Senate. They keep saying things like, well, you got to choose between investing with your progressive values or investing for good returns. And they know the data's there. They know you don't have to choose, but they're not saying you'll get worse returns. They're just placing this false choice. And they've done a really good job of convincing people that you do have to choose, which is wild. So we're trying to push back on that. Another misconception is what ESG is. I've taken issue with the term ESG ever since I had first learned what it was. I was CEO of IR Labs looking for a climate-friendly investment option for the 401k plan, and our 401k advisors started offering ESG options, and I had never heard of the term. I looked it up. Okay, environmental, social, governance, investing. I guess I could understand why they would send this in response to me asking for climate friendly. Um, but then looking up the funds themselves, I saw they were invested in Exxon and Chevron. And I thought, okay, I don't really know what ESG is, but I don't think it's climate friendly investing. So I think there's a big misconception about what the intent of ESG was now that I've been in the financial industry for a few years now and I've really learned um, much more about ESG. What I've learned is that it was never the intention of ESG fund managers to make climate friendly funds. Um, there's no definition actually of ESG beyond the three words that the acronym stands for. Beyond that, each fund manager interprets it differently. And the most frequent way of interpreting ESG is to assess the risks posed to companies by environmental, social, and governance factors, not to assess the risks posed to the planet Earth or to people by companies. So it's an inward looking assessment, not outward looking. And so it's being presented by financial advisors as, hey, here's a fund that's better for the planet, but that's actually not the intent of the fund manager. The intent of the fund manager is to avoid risks for the companies in the fund. So it's a huge misconception. And I'm actually kind of glad that ESG has been on the outs recently. It's come under fire, and I have a different reason for disliking that term than I think a lot of the people who have gone on the attack about it. But I just don't think it was a term that served us well in investing. So I'm kind of glad that people aren't using it as much anymore.
Well, I'm so happy you've sort of brought in another sort of different viewpoint on that today, and specifically on the term ESG and where it's going as a term, and sort of bringing the conversation back a little bit more towards your business experience. How have your experiences as a serial entrepreneur shaped not only how you approach building a brand and business, but also what you expect from your team and your clients?
Yeah, it's really evolved a lot. What I've expected from my team. I've been an entrepreneur since 2015, and we've gone through COVID in the interim, and it really changed everything. And I would say there are downsides. It's tough for people who are just young, graduating out of college to learn as well if they're working in a remote environment. And a lot of companies have gone to remote first, and not having that in-person interaction every day in an office, I think removes a lot of the learning opportunities that young people usually get straight out of school, or that they used to get straight out of school working in an office environment. But the pros, as somebody who hires on my end, is I've been able to hire just the absolute best talent, no matter where they are, and I don't have to try to convince them to move and move their families to some physical office. Sphere is completely remote. We barely have two people in the same city across the U.S., and so it's been really amazing to have just such an incredible team to work with. At IR Labs, we also have an incredible team, but there was a lot of convincing people to move to the Bay Area where our offices were, which is a big deal to move people and their families. So it's really nice to be able to tap into top talent no matter where they are.
No, I think the sort of remote first working has definitely given so many businesses, but also individuals and their families, so much more flexibility, which, as you said, enables you to really hire the top talent. And sort of taking that idea a little further is, when I was looking into your background, so many of your ventures, you seem to have pursued ideas that have seemed impossible, whether it is investing into sort of more sustainable options through your 401k or in some of your previous companies as well, which has been really cool to read as someone who, someone who's sort of starting out in this sort of space. How do you decide which ideas are worth pursuing versus which are those that are best sort of left on the drawing board?
Hmm. It's something I learned getting my MBA at MIT, where I took a lot of classes in entrepreneurship, and it's this concept of fail fast and fail often. They do a lot of trying to teach people that you shouldn't be scared of failure. You actually want to find out quickly if an idea isn't the right one, and so you break down the idea into the smallest possible piece that you can to get to an answer of, is this the right solution? Is this the right idea? And if you find out it isn't, if this little experiment you can do doesn't work, you want to get to that as quickly as possible, not spend a year of your life working on it before you realize, oh, wait, this, or even 5 years of your life before you realize, oh, wait, this is not actually the right solution for this problem. And so, for example, while I was at MIT, IR Labs was the third technology that I worked on. I did start working with a few different labs across MIT prior to that, and there were some really cool technologies. And I was just learning how to assess technologies and their readiness to spin out into a company. And with each one that I worked on, I learned a lot, and I brought that knowledge to then being able to assess the what became the IR Labs technology and realizing, okay, this one's ready to go. But prior ones were amazing, but needed maybe another 5 years in the university lab setting before they'd be ready. And it took me a few months to figure that out, but I'm really glad I figured it out while I was still a student, while I was still in this kind of magical place where you can experiment and fail, and the risks you're taking are not that big when you're in a university setting. It's much lower than when you're out in the working world and you've raised a lot of money. And so I felt grateful that I was able to do that experimenting while I was a student, and iterate and then find really the right team and the right technology to spin out.
No, I'm sure it's such an opportunity and such a privilege to be a student and to have that flexibility. And equally, so much respect to you for really making the most of it by the sounds of it. And sort of on that sort of student strand, if the next generation is the future of climate action, what skills or mindsets are most underrated among young change makers today?
Hmm. First of all, I just have to say I'm so blown away by young change makers today. It gives me so much hope for the future. Whenever I meet young people, it just seems to be a generation that, on the whole, is so much more in touch with the change that they want to see in the world and able to talk about tough topics and really call into question norms and really ask, why are we doing it this way? Isn't there a better way to do it? And be uncompromising, not just accept things are the way they are just because. It seems that this generation is really living their values in a whole new way that I haven't seen in prior generations, and it gives me so much hope. I think something that isn't taught in school and um, that oftentimes people don't realize until they get much later in their careers is sales. Being able to sell something is an incredibly valuable skill. And it's not something that's taught in school. But sales is really what makes a company successful. Someone can have a brilliant idea, but if they don't have people who know how to sell that idea, they'll never have a successful company. I think there's a lot of worship of engineers and of the people building things, but I think equally important, maybe even more important, is the ability to sell the product. And when it comes to sales, the key skill is being okay with failure. You are in school, and especially if you're a good student, you're used to getting good grades, getting good validation, succeeding a lot of the time, maybe a majority of the time, even. And then if you go into a sales job, you are going to hear no to a vast majority of the times that you pitch. You're going to be saying to lots of people, hey, do you want this thing? And they'll just be like, no, not the right fit for me. No, I don't want this at this time. Or they'll just ignore you. And it can be very demoralizing for someone who's used to winning all the time. And so people who can hear no over and over and over again and still pick themselves up and still be excited and optimistic and bring that storytelling to the next person they pitch, that type of skill is hugely valuable and something that I think you only get through practice. So even like the old-fashioned kind of cold calling types of jobs, I think can be really valuable, especially early in people's careers, so they can understand the value and how hard it is to sell and how important that is.
No, I completely agree with you. I definitely feel like I had so much exposure to this in my own previous role, and I'm so grateful to have had that moving forward. And I think I saw somewhere on a podcast once that really building a business and being an entrepreneur is just rejection exposure therapy. So definitely agree with you on that point. And then just finally, one more question on that theme of failure is. What's a failure or pivot you experienced that ended up shaping your approach more than any other success that you've had in your career?
Hmm. I think what's really happened over my career is I've become more confident as an entrepreneur.
Mm-hmm.
And when I first started out as an entrepreneur, I already had the benefit of having done an MBA focused in entrepreneurship, which just basically means I heard other entrepreneurs lecture my classes multiple times per day for 2 years straight, different guest lecturers who were entrepreneurs themselves. So I had the benefit of a huge amount of knowledge shared with me from other entrepreneurs who had been through it. Um, and so I think that saved IR Labs from a lot of failure points we could have had because we'd heard so many other people's experiences. But to me, what really changed over time was that confidence. And confidence is super important as an entrepreneur. You're trying to convince other people to believe in your vision for the world. And when I was first starting out and pitching venture capital investors, I would pitch them and then they would always have feedback for me. And I would take their feedback so seriously. And they would give me this feedback. I would go back and change our pitch so that the next day, pitching the next VCs, it would be better, I thought. And then there was one day when I pitched two VCs, one in the morning, one in the afternoon. And the feedback from the one in the morning was, you're not raising enough. You need to be raising a bigger round. And the feedback from the one in the afternoon was, you're raising too much. You need to raise a smaller round. And coming back that evening and thinking, okay, how do I incorporate this feedback into my pitch? I realized, wait a second, I think I'm giving too much value to the feedback of people who have heard 20 minutes on the topic of what I'm doing, whereas I'd already been working on this for a year. I knew so much more. I had so much more context than they could possibly get in 20 to 30 minutes of chatting. And I realized I need to not take every little bit of feedback so seriously. I need to be more confident in my own opinion of how much money we need to raise. That's that specific example. But in general, I've taken that learning forward. And it's not just how much to raise, it's really any big decision for the company, understanding no one understands what I'm doing as well as I do, and having some confidence in that. And then if I hear recurring feedback from pitches, if I'm hearing it from 5, 10 different investors all saying the same thing, I really pay attention to that, but I'm not swaying back and forth nearly as much as I did back then.
Well, that's incredible advice, and I think really important for people of all ages, but especially young people and young change makers. So thank you so much for sharing that. What would your advice be on building out a narrative and a pitch around that, given that there is this sort of opposing narrative that this isn't really a profit-making space in the same way that maybe other more traditional investments are?
I think at the end of the day, it's all about storytelling. And there's so many different ways to tell a story. You can tell it with data, you can tell it with personal anecdotes or talking about specific situations. Uh, and we do all of those things. And so, we point at data when we're talking about how when you invest in fossil fuel companies, if you have been doing that for the past 2 decades, you've actually been losing out because it's had the worst returns of any sector of the economy. Um, we also uh, We story tell when we talk about voting. And, in the world of 401ks, it's especially important. You cannot legally actually offer an investment option in a 401k plan that does not have as good of returns as comparable ones. And there are lawsuits all the time in the world of 401ks for this. So we talk about the fossil fuel underperformance. We also talk about how we vote. So one way we have impact is by not investing in certain companies. But another way we have impact is by voting our shares at the companies we do invest in to get them to do better for planet and for people. And a lot of people don't even really think about the fact that they are voters. We think about going to vote every 4 years in political elections, but actually, if you invest in any kind of fund, like an ETF or a mutual fund or in a 401k or anything, you're investing in hundreds of companies, and the fund manager is voting on your behalf every time there's a shareholder proposal at any of those companies. And there are a handful of shareholder proposals plus board elections at every single company you're investing in. So that's thousands of different topics that they're voting on your behalf on. And the big fund managers are voting against the climate change related shareholder proposals 98% of the time. And so we do a lot of storytelling when we talk about why we vote in favor of those climate change related shareholder proposals. And we're directly voting against what the management of the company recommends to do. The 98% of the time that big fund managers are voting against these proposals, it's because management of each company is saying you should vote. We advise you vote against this proposal. But that's because corporate management is financially incentivized to maximize short-term returns. They're trying to maximize returns for the next quarter, or the next few quarters. We are representing investors who care about long-term returns. If you're saving for retirement, you have a time horizon of 10, 20, 30, 40 years even. And when you have that kind of time horizon, you should vote differently than management recommends. For example, putting solar on Costco's roof. It is an upfront investment. It costs money. It makes sense. Management would recommend against that. But if you're a long-term shareholder, you would care that it actually saves the company money after the first 2 or 3 year payback period. From then on, it's just upside for Costco. And so as a Costco shareholder, if you're holding onto those shares for more than a couple years, you should be voting in favor of those shareholder proposals. There's a similar thing with the big banks. We invest in all of the biggest banks in the US. And they've all had shareholder proposals over the past few years saying, we want you to stop financing new fossil fuel development projects. Management has recommended against voting for those shareholder proposals. And so the big asset management firms keep voting against. But we at Sphere vote in favor because those loans they're making to develop new fossil fuel development projects, aside from there being scientific consensus that we cannot develop more fossil fuel projects if we hope to stay within the bounds of planetary health that we need to see. Aside from that, from a purely financial basis, those loans are justified, assuming there will continue to be sustained demand for fossil fuel products 20, 30 years from now. And even though right now we're in a political environment where it seems like, yes, the president loves fossil fuels, when you look at the long-term trends, the writing is on the wall. It's an industry in decline, and the demand very likely will not be there that they are assuming will be there and making their financial models to approve these loans. And so the banks will likely lose money on these loans in the long term. It's just a financial bad deal for shareholders for their bottom line if they're planning to be shareholders of these banks for more than a few years. And so we vote against those proposals. And we find over and over again that voting for the planet also helps improve the financial long-term outcomes in our belief for these shareholders. And those things can go hand in hand. So it's a new way of looking at shareholder voting that we do a lot of storytelling to help the 401k community understand that voting for the planet also helps the bottom line for these investors who are saving for the long term.
No, that's really fascinating, and thank you for sort of explaining that in so much detail. One thing I wanted to pick out from that, and I guess thinking also about what I've been developing recently, is I've been reading a lot of reports recently about how women are much more likely to invest their money with a little more values aligned, and more likely to impact invest. And with the great wealth transfer that's about to happen, we're going to see more and more women who are inheriting large quantities of wealth and investing their money very differently to how traditionally men have invested their money. As a founder and CEO of a company that is sort of investing into the environment and into climate. Did you find that your investors were skewed towards more women? And do you find that your clients do you have more female clients, or what does that sort of gender split look like for you?
We actually don't. I would have thought that as well. But there are a lot of men out there who are very passionate about climate change as well. So we actually have very good diversity of who invests with us. And I think probably the statistics you're quoting are balanced out by, this annoying thing in society where men have tended to engage more in investing decisions for families than women until now. I hope that's something that changes because there's also data showing that when women make investing decisions, oftentimes they're investing in broad market indices, riding the growth of the economy at large over time, which is a great way to invest. Whereas men oftentimes socially talk about investing. They like to brag about, hey, I invested in this stock before it was big and I made lots of money. They don't brag so much about the bets that don't pay off. And making those bets tends to not perform as well as just broadly diversified investing, which is what the women tend to do and not talk about it as much. And so I think we probably have a lot of male investors because they talk with their buddies about investing and they're trading tips all the time, and that's how they hear about us. Women historically have not spoken with each other socially about investing as much, and I really hope that we can start to buck that trend and have more and more women talking about these topics and as a result, investing more.
Amazing. Well, thank you so much. And very cool to hear, to be honest, that men are also investing into climate and climate change. It's refreshing to hear about. I'm very happy. It's good news. Well, thank you for sharing all. Really appreciate all your insights. And yeah, once again, it was such a privilege to chat, and thank you for your time.
Yeah, thank you so much. It's been a fun conversation.
Tribe Talk is a streamer studio production. Try it free at streamr.nyc. Executive producer, David Walters. Videography and editing by David Walters. Graphic design by Tristan Bresnan. Original music by Benjamin Senmana. Hosted by Victoria Goddard.
Tribe, taking root today to advance tomorrow.